In the equity markets today, taking a look at the March S&P futures, which had a big swing from up 2.46% all the way to negative territory, finishing near the lows. 42.94 and a quarter was the low in the March contract. That was down about 0.4%. We finished pretty much close to that level, about 433.25 or so. Again, down just short of 0.4%. At least it was slightly off those lows. On the high side of things today, I mentioned we were up 2.46%. Volatility continues, positive to negative. 2.46%, 44.46 and a quarter was the high. That's that volatility we've been seeing in the S&P lately. There was an FOMC meeting today, as I'm sure you know by now, and the Fed actually said it will soon be appropriate to raise the target range for the federal funds rate. They said they were going to let maturing purchases, maturing bonds, focusing on treasuries, roll off the balance sheet, and they said they would actually start actively tapering the balance sheet, or actually cutting the balance sheet, after they started raising rates. They implied that there would be a rate cut at the next meeting. We'll see what the CME Fed Watch tool says about the probability of that over the coming weeks. That's something you should definitely watch if you're looking at what the Fed does. That CME Fed Watch tool will give you what the markets is actually pricing in those Fed funds rate. And it wasn't pricing in a very high probability of a rate hike today, and therefore it was accurate again. Now, when you look at overall what the S&P did, you got to look at treasury yields, because treasury yields spiked, which helped to keep a cap on the S&P as it was trying to get back to positive territory in toward the very end of the day. Yields spike after the FOMC announcement, especially in the 2-year, 5-year, and 10-year. And when we see those spikes, that's been weighing on equities lately. And all four indices got hit by that treasury spike as well. So overall today, big swing from positive to negative in the S&P 500.